It's almost 2021, and you know what else it is? It's almost a year that I've been on YouTube, believe it or not. I posted my first video December 31st of 2019. 40,000 subscribers later, woo! Thanks everybody. In today's video, we're going to be looking into the indices, we're going to be looking at some indicators, and guess what? There's almost a risk-off signal that flipped. Ah! No need to worry, no need to panic. We're going to cover all the major levels to keep an eye on. Let's just go ahead and get right into today's episode. All right, everybody, welcome back. We're going to start off looking at the indices, and we're kind of just run through this. I'm going to keep today's video fairly shortly because there wasn't too much price action going on, okay? First off, S&P 500, what took place today? We gapped up, and then we just basically chopped sideways. You can see this little tiny little candle here, an inside trading day. What does that mean? Well, sometimes inside trading days can lead to pretty aggressive moves in certain directions, but as it stands right now, we're coming into the end of the year, volume's typically lower, it's a holiday week, we got New Year's, so right now, we're just holding above the 5 EMA still, and we're holding above this previous breakout zone and above this previous gap. Not much action going on as of right now. When we look at the 30-minute time frame, you can see that we did have this little gap up, right? We showed some strength, and then we kind of rolled over. This last 30-minute trading candle, you can see there was some weird action going on here. Just this huge spike up to 37.38, and then all the way back down here, creating a little bit of a doji candle here closing at 37.32. Now, sometimes on moves like this, these type of candles can represent actually reversal type candles, but we got to see how it plays off. I wouldn't be surprised to have it continue to kind of draft higher throughout the rest of the year, but you know, I wouldn't also be surprised to see it come fill this gap or potentially hit this lower channel. As I see it right now, we tagged 37.50. That was our target area, and then we kind of rolled down, then we came back up today, and we rolled back down a little bit. So overall, when you look at the 30-minute time frame, we're kind of putting in still higher highs, boom, 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 and we're still having higher lows, just boom, 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 boom. All right, so let's look at the industrial average. This is the Dow Jones. I don't see how much tighter this thing could get until it just explodes in either direction. Look, it's going to make a big move fairly shortly. Now, what's interesting about this move right here and the time frame is, if you remember, this is very similar what was happening in the end of 2019. In the end of 2019, we started seeing this very slow draft up. The Bollinger Bands contracted like this for quite some time, and then we started to see a little bit bigger moves take place. Now, some of the indicators actually flipped risk off during that time in 2019, and we're starting to see very similar type situation here. So yes, this drafts higher, on balance volumes kind of drifting lower, but we're kind of seeing a little bit of an uptick right here. You know, maybe that might mean something. Small reversal type looking candle here, but we finished up, I believe this is an all-time high again. We finished up at an all-time high, or right just about it, we squeezed out an all-time high. Not the greatest looking candle, but still we're above the 20 period. We're in this pattern still. We're above the 5 EMA, so you know, things are still kind of just drifting. On the IWM, this is the Russell 2000. Russell 2000, the MACD is spreading. It's kind of just signal lines open just a little bit more. That's not the greatest sign, but it is still way above zero. That's you know, a bearish crossover. We broke out of this. That's a bearish type pattern. We saw a little bit of an uptick today. We were above the 5 EMA, and did we close that? So it closed. So 196.56 is where the EMA is. And we closed today at 196.41, so we closed just barely below the 5 EMA, but we're still above the 20 period. We got to see what takes place there. On the 2-hour time frame, I've been posting this one on Twitter. Look at, I said if you were short up in this area and then you came down here, I called out that, hey, this would be a good place to scale in some profits. And the reason was simply because it looked like an area where it was going to start bouncing. I saw a hammer candle, and we started to see that bounce. Today, we gapped up, and we really just kind of ramped and camped. That's all we did. So we have some long upper wicks here. It's going to be interesting to see how things play out after hours, but you know, look for a roll over, and if it rolls over, look at 196. Where's 196? Yeah, 196 right here. That would be the flush point. The reason why is there's resistance wick there, support, support, support. So getting down through there, and then the next level would have to break down through 193.50. That would be a dead cat bounce on the 2-hour time frame. However, keep in mind still, there's this low that was one of the more, you know, decent pullbacks that we need to test. Okay, so we pulled back here and then we bounced on this area, and now we're coming down here, we're bouncing again, kind of rolling it over, potentially still breaking out. Somebody on Twitter called this out, and you know, I'm glad that they saw this. I found this and I never called it out yet, but what this could potentially be is a head and shoulders topping pattern that is forming here. You can see the left shoulder, head, and you're seeing this bounce right here, but we need to see a little bit more of a confirmation, so I'm kind of waiting for it to crash through 196 to call it a head and shoulders, and then you can watch the neckline to potentially break through that. We still have some support below us, so like I said, you know, anything can happen at this specific point in time. We're all this price action and all these indices are just up against a massive area of resistance. And if it breaks through it, we might see just a big old squeeze. Now, here's the NASDAQ 100 just drifting up higher. You know, this breakout of the symmetrical triangle is not being supportive really by the money flow index. We are above 50 now, 58.07. So that's a decent sign. You know, we finished at up $1.87, so basically flat. Okay, we opened up here on a gap up, then we closed, and then we opened up again on a gap up, and then we closed below that. So it's just relatively weak looking type candles. I think on the QQQs there's a bearish engulfing type candle. Don't quote me on that, but I don't have the chart in front of me. We're still above the 5 EMA and we're still within this pattern. Here's the NYSE, the NYSE composite. You know, this is a broad market index as well. Just the MACD is pretty bearish trending. The price action is just drifting sideways. We're still above the 5 EMA, still above the 20. Something's going to give here very soon. We're either going to start making some significant moves to the upside, or this thing is going to have just a sharp correction to the downside. We will see here in the near future, but as I see it, the 20 period is that intermediate term trading kind of trend, and it's bullish right now, so we got to call it what it is. If you're new here, that's me. This is my dog Coco. I'm going to be doing more video type stuff with me actually on camera coming into the new year. If you haven't done so already, I really appreciate that thumbs up. Helps my channel grow. Yeah. Indicators. All right, so this is pretty interesting stuff. I'm going to go through these quickly as well. Indicators, look at the BPSPX. Just kind of, the RSI is just, relative strength is just weakening. We're below 50 right here, and you can just see right here on the SPX, it's kind of drifting up. So it's just not being supportive. If you don't know what the BPSPX is, it's basically based off of point and figure charts. It shows right here we're at 72. That means 72% of the stocks in the S&P 500 are on buy signals based on those point and figure charts. And what we saw here was this big move to 80, and it's just drifting lower and lower. Now, another thing that I want to point out is breadth of the market. Breadth is still negative as we kind of drift sideways. So, you know, these moves is not being supported by, you know, any breadth right now in the market. The night high low, this is pretty interesting. This has just been jammed up at a max level for quite some time now. I'm going to start waiting to see this roll over, and then I'll bring it back into play. The last time I seen it jam like this and not actually see a little dip was, guess what? Right in December to the, you know, basically start of 2020. You can see right here, it wasn't even high as this, but you saw it just kind of just trucking along, holding these highs, boom, 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 and then you saw this pullback. We saw a little bit of move. Guess what? We came up, made an all-time high. This was a negative divergence, and then we saw that drip. So, you know, maybe we see something very similar play out in the NYSE high-low index. We'll keep an eye on it, but these are extreme high levels. It's just jammed up to the max. Here's the sell signal. Sell signal's not giving us much. We're still kind of dripping lower. We haven't crossed above the 0.80. That's when we know when the sell signal is activated. And it doesn't mean go buy a bunch of puts. It just means, hey, you know, be risk off a little bit more, maybe protect some of your gains, you know, take it for what you want, and I'll let you know during the process of what I'm doing. However, this purple shaded line in the back, you saw a little bit of a spike up today above 80. Now, if that spike continues to drive, you're going to see this 10-period moving average also follow suit. So it's going to be interesting to see how that plays out. Now, lumber to gold ratio. Now, this is on the 3-week rate of change. Okay, so the 3-week rate of change is a lot quicker. You move a lot more frequently, but I like to look at it as well as the 13-week rate of change just to really help determine, you know, maybe get in front of a risk-off move before it actually happens. So as far as a 13-week rate of change goes, we're still up at a higher level, so nothing to worry about there. However, the 3-week rate of change is at 0.47. All right, so it's not below 0. So what happens when we go below 0? If you use the lower time frame right here, well, that means the following week would be a risk-off move. So you'd want to, go into risk off type assets, whatever you find is appropriate. It could be cash, it could be bonds, it could be utilities, whatever the case may be. But just know on the 3-week rate of change, you can be wrong more, but you can also be right more. And you trade more frequently on this slower time frame. So yeah, it looks like it's about to cross down below 0. So that could mean if we do it tomorrow, that means the following week could be a risk-off type environment. But like I said, 3-week rate of change. It's not the 13-week rate of change. And that's the one that I did on the interview with Michael Gayad. Here is the utilities over the SPY. The rate of change is almost crossed above 0 as well. So, we're at 1.17. When it crosses above that, the 4-week rate of change, that means it's a risk-off environment. So here was risk on. You can see we crossed there. It's been risk on as we're moving up. Maybe when we cross above it, we get risk off and we might see that down pull. It's not guaranteed, but it just lets us know that the conditions for a pullback are very, very real. Okay, the signal doesn't predict. It just prepares you and lets you know, hey, there might be some traffic up ahead. The conditions for, an accident are there. All right, if you haven't watched the interview with Michael Gayad, he explains that very well. Here's the NYSE. This is the fast stochastics on the NYSE, the summation index. Look we were waiting to see this actually start rolling over. It is rolling over now. Okay, it might still uptick. We don't know that, but this is the place where you don't really want to go long in positions until you are down here. When you're down in this range, that's when you could find some swing. By the way, swing long positions, meaning you might hold them for a little bit longer into major areas of support. Here you want to sell into strength. So when we see these big moves to the upside and the RSI is very frothy, you can swing short and then you could scale out as you get aggressive moves to the downside. So that's, just a quick tip there. Commodities, okay? I'm going to probably be making a movie on gold here. If you don't follow me on Twitter, you can follow me there. I've been posting some stocks on commodities and mining companies because the way things are going right now, it's going to be one, commodities are going to break up to the upside or they're going to break down, or it's going to be the dollar that continues to break down or break up. And I'll show you there at some very interesting times. So first off, CRB index, widely tracked index for commodities, okay? Hedge funds track this, institutions track this, the Fed tracks this. Guess what? We had a strong day. Where are we? We're at a prior area of resistance. Look at that MACD though. That MACD is very bullish. The RSI, bullish. Everything's looking pretty strong so far. If we can get above this resistance, we might very well take this to all-time highs, maybe even higher. I mean, sorry, not all-time highs. All-time highs on this specific chart. So the 2020 high right over here is what I meant. Okay, it's been higher than this all before. Gold still struggles to make it above this little upper gray dash trend line. If we start breaking above 1900, it's going to be a good sign. Gold's looking pretty strong right here, but anything could still happen. Okay, we have the 50 period very close to the 200 period. You never know. We might get a death cross, and then all of a sudden gold starts to sink again. We don't know yet, but from a technical perspective, everything looks pretty good. We broke out of this, boom. We're above the 50, above the 200. They're both sloping up. You have the RSI, it's trending up. Things are looking pretty good so far for gold, okay? Silver, same thing. Silver broke out of this actually descending triangle, but that was in bullish context. You have the 50 sloping up nicely, 200 sloping up nicely. You got the price per percent oscillator sloping up nicely. This is on the daily time frame, mind you, so it's daily time frames are more shorter term trading. I like to show the daily. You can look at the weekly, you can look at the monthly as well. Those are longer term. I plan on longer term holds with my silver, and I'm also starting to dabble into some more mining companies. Look, I moved this red line up a little bit because we broke above it that I previously had, but then we saw some more resistance. So we got to get above 27, then 27.50. It looks like it's kind of getting held up there, but we're putting in higher lows. We very well might just get out of this very, very soon, especially if the dollar keeps falling. It's very possible to reach 30 and then even all-time high. And a lot of mining companies are just going to be screaming if we get silver to an all-time high or even break above 30. Let's look at bonds. Look at bonds. I want to point out a couple of things here, okay? Yes, it's been trending lower, but we're putting in, since November, higher lows and still lower highs, mind you. So it's a little bit of a symmetrical triangle. If you look at the RSI and you look from here and you draw a line all the way to here, it's nicely trending up right now. So that's a good sign. We're still below 50, okay? And we're still below this resistance. If we start seeing this move to the upside, we'll probably see yields break down through these levels. As I already stated, the 30-year, the 10-year, higher lows, we're trending up. You see the curve steepening. Okay, this is a widely tracked, this is the 10-2, the curve, boom. You know, we saw this happen also going into 2020. You saw the 30-year putting in higher lows, then it cracked through. 10-year, we saw it, you know, put in higher lows, and then boom, cracked through. Are we going to see a repeat? You know, I don't know. I really don't. But as I see it right now, we're just kind of going sideways. Maybe we see this for a lot longer, you know? I don't know. I really don't know yet. So we got to just be patient here. The dollar. The dollar is very interesting. The dollar falling wedge broke out, looked pretty bullish, but then we just been drifting lower. Now, there's a couple things that, you know, have me on edge about the dollar because everything looks very bearish right now for the most part. However, you can see that we put in a little bit lower of a low here than here. That's a positive divergence. The MACD curling itself back over. That's pretty bearish, and we're below zero. You know, we broke out and we're drifting lower. We're below the 20, below the 50, below the 200. They're all sloping down. It's very, you know, very bearish context, bearish type trade right now. You know, people are very short the dollar from what I'm hearing. However, when you look at the weekly time frame, yeah, you're seeing it being, you know, beat down. But, you know, we're coming into this area of support, and it's a falling wedge, positive divergence. You know, there's a strong possibility if we start trending sideways and start building out a little base like we did here in 2018, what happens if we squeeze above? All right, so you got to be prepared for that because we're at the lower range of the Bollinger Band. Not the MACD, sorry. The RSI is moving into that oversold territory. You know, things are getting primed for some sort of move in the dollar. If it's going to be an aggressive move, I don't know how aggressive it can be. Maybe we get a little bit move up to 91, 92, and then we start heading back down. This could take a while to play out. So we got to just keep our eye on this. All right, everybody, that's all I have for you actually on today's video. I wanted to try to keep it a little bit shorter today. Just in conclusion, look, we're coming to the end of the year. We have a holiday weekend. Don't do anything crazy going into the end of the year. Anything could potentially happen. We're sitting at a very strong area of resistance on our charts, on the indices, on these large time frames. So you got to just be patient. Wait for confirmation. If we start breaking above, yeah, play into the momentum. But as I see it right now, we have a lot of signals about to turn to risk off. We're at these very specific areas. So right now, it's the best time, in my personal opinion, what I'm doing. This is not a recommendation. I have my brakes kind of just pumped, and I'm kind of looking from left to right, just being careful out there. All right, everybody, that's all I got for you on today's episode. Hope everyone is having a wonderful day and a happy new year.